Let's take a look at exercise 12-2. This one is about dropping or retaining a segment. So there's a seniors home. They have three services: home nursing, Meals on Wheels, and housekeeping. And then we're given the data on those three programs. What do they say? So they're thinking about discontinuing the housekeeping program, and we can see here that's likely because here it's showing a loss. So depreciation in the housekeeping category here is for a small van sorry, that is used to carry the housekeepers and their equipment from job to job. If the program were discontinued, the van would be donated to a charitable organization. Depreciation charges assume zero salvage value. None of the general administrative overhead would be avoided if the housekeeping program were dropped, but liability insurance and salary of the program administrator would be avoided. So, should the housekeeping program be discontinued? So, before we take a look at the solution, the approach is going to be to look at the things that are going to change if we get rid of the housekeeping division. So from looking at this, if we get rid of housekeeping, we're going to lose our contribution margin. And then in our costs down below, which ones are we going to lose? Well, we're told down here that liability insurance and salary of the program administrator would be avoided. So liability insurance and program administrator salary, so they are going to disappear if we get rid of housekeeping. Depreciation, give it a second to think. Would depreciation be lost, be avoided? And the answer to that is no. The van was already purchased. It's a sunk cost. If they get rid of housekeeping, the van is going to be donated, and they won't get any money back for it, so that doesn't come into play in our decision. General administrative overhead, well, we can see here, allocated on the basis of program revenues. So that's a cost that they just randomly allocated out, and really it's not going to change whether we keep housekeeping or not. So that is kind of throwing off our number here and making them think that this unit is probably not as profitable as it really is. So we're going to take a look now at the solution. Okay, so again, we said we're just going to look at the things that are different if you make that decision. So contribution margin lost if the housekeeping program is dropped, we're going to lose $80,000. Fixed costs that can be avoided, well, you're going to save $15,000 because you're not going to have liability insurance, and you're going to save $37,000 because you're not going to have that salary. So in total, you're going to save $52,000, but you're losing $80,000. So really, the income is going to drop for the company by $28,000. Here's another approach. This one looks at the differences. This here takes the current, all of the cost, and then all of the cost again if it's dropped, and looks at the differences. So you're fine to go through that on your own. This is the method I would use here. Part 2 says recast the above data in a format that would be more useful to assessing the financial viability. The only thing that's really different is, I'll go back to the question here, this general administrative overhead, it's allocated out. It's a common cost that they just allocated. If we take that out of play, so you have everything as it was, but you take to get the product segment margins, and then you have the common cost, which was the overhead down below. You can then get a better idea that each one of these units is actually contributing